All right, so we're really diving deep today into Allied Venture Partners. We're going through their LP newsletters, trying to get a real sense of their strategy,
Yeah.
especially with everything that happened in the market
Right.
from May to November of 2023.
Absolutely.
And you know, one thing that really stuck out to me going through these newsletters
Right.
is that the founder, Matt Wilson, he really seems to emphasize this idea of getting in early with startups.
Yeah, it's
You know,
funny.
really early.
He actually calls it being the first conversation yet the last money in, which I think is such a great
Talk
way
about that.
to put it, because it's more than just writing the first check, right?
Right.
It's about really being there for the long haul and being a true partner to these founders,
Especially when things get tough.
Exactly. Like, imagine you're a founder, right? And everything's going great. You've got the wind at your back. And then suddenly the market takes a turn.
Which it did.
Which it absolutely did. And having an investor who's,
Who understands.
understands the long game and isn't just going to, jump ship when things get a little choppy. I mean, that's
huge.
invaluable. Yeah.
Absolutely. And, it's interesting because he's also, it seems like from these newsletters, he's pretty open about how he actually goes about picking those companies.
Right.
He's got those 4 core values that he always seems to come back to.
Yeah. And, those values, I think, they're really telling.
Okay.
Especially when you look at what the newsletters tell us about, what was going on in the market during those few months.
Right.
But just to recap, right, he's really laser focused on a couple of things.
Yep.
Number one, paying a sensible price up front.
Entry price matters.
Exactly. He doesn't get caught up in the hype.
Right.
2, he really wants to find teams that have deep, deep expertise in whatever it is they're building.
Okay.
It's not just about a cool idea. It's about, can these people actually execute?
They have to know what they're doing.
Precisely. And then the third thing, which I think is so crucial in today's environment, is this focus on profitability, or at least a clear path to profitability.
Interesting.
He's not interested in companies that are just burning through cash. He wants to see...
Right, like sustainable growth.
Exactly. Sustainable growth, strong unit economics, a real business model.
Yeah, make it make sense.
Exactly. And then finally, and this might be the most important one.
Okay, I'm intrigued.
He really emphasizes the need for meaningful and sustainable differentiation.
Okay, so unpack that for me a little bit.
So basically he's saying it's not enough to be doing something slightly better than what's already out there.
Right.
You need to have a real edge, something that sets you apart in a crowded market, and something that's not easily replicated.
Okay, so how do those values, how does all of that play into what we were seeing in the market back then? Because if I'm reading these newsletters, right?
Yeah.
Things were a little,
Yeah, to say the least.
You're catching on. I mean, you think about it, right? We had that initial volatility.
Right.
Things kind of slowed down over the summer. Funding got tighter. Valuations started to compress.
It was a roller coaster. It was a classic boom and bust cycle, right? And when those corrections hit, a lot of investors, they get spooked, they pull back.
They go into panic mode.
Exactly. But the thing about those core values that Wilson talks about,
Yeah.
they're like an antidote to that panic.
Okay.
Because if you're focused on paying a sensible price up front, you're not as likely to get burned when the hype bubble bursts.
Right. You're not overpaying at the peak.
Exactly. And if you're prioritizing companies that have strong unit economics and a path to profitability,
Yeah.
well, that becomes even more critical when funding dries up, right?
Makes sense.
Because you need to know that these companies can actually weather the storm.
So it's almost like Allied is inherently more insulated against these market swings because of this approach.
I think that's a really good way to put it. They're not chasing the flavor of the month. They're looking for companies that are built on solid foundations, companies that can weather those storms and come out stronger on the other side.
Interesting.
And, that last point about meaningful and sustainable differentiation.
The thing you said was most important.
Yeah, exactly. That's key, because in a crowded market, you need something to set you apart.
Right. To stand out.
Exactly. You need to be able to answer that question, why you, why now? And I think Allied understands that better than most.
Interesting.
They're looking for companies that have a real reason to exist, not just companies that are trying to, be the next big thing, because sometimes the next big thing is already out there.
Yeah.
It just needs someone to actually build it the right way.
Right. Build it to last.
Exactly.
It's interesting thinking back to those market swings we were just talking about, because the newsletters really do paint this picture. of a roller coaster ride,
Mm-hmm.
you know,
Totally.
from May to November 2023.
Yeah.
It's like we see this initial volatility,
Right.
and then things kind of slow down over the summer.
Hmm.
Funding gets tighter,
Yeah.
valuations start to shrink. It's
It's a lot.
it's a lot to process.
It really is.
But what's interesting is that, even amidst all of that,
Yeah.
Wilson seems almost surprisingly optimistic
Mm.
about
Mm-hmm.
new opportunities emerging.
Right.
So I'm curious, like,
Yeah.
why is that? What's the angle there?
Well, I think you have to remember the bigger picture here, right?
Okay.
The newsletters, they touch on things like interest rate hikes,
Right. That was a big one.
which was a huge factor, some instability in the banking sector, which definitely didn't help.
Definitely shook things up a bit.
And then, of course, the after effects of those kind of inflated post-pandemic valuations.
Right, because everything was so high for so long.
Exactly. And then it was like, okay,
Reality check.
what's the real value here? And so you combine all of those factors together,
Mm-hmm.
and you basically have this perfect storm that kind of ripped through the entire VC landscape.
So how did investors react to that?
Yeah, good question.
Did they all just slam on the brakes?
You saw a little bit of everything, to be honest.
Yeah.
Some funds definitely adopted a much more cautious approach.
Mm-hmm.
Maybe they reduced their fund sizes,
Okay.
or they got a little more creative with their deal terms.
Okay, to try and manage that risk.
Exactly, just to try to,
Make things work.
hedge their bets a little bit in this new reality.
Because it was a new reality, everyone was trying to figure it out.
Absolutely. And I think that's where this whole idea of tier one investors,
Okay.
which Wilson talks about quite a bit in the newsletters, that's where that really comes into play.
Okay, yeah, break that down for me.
So when we're talking tier one investors, we're talking about the kind of, the heavy hitters in the VC world.
Right, the big names.
The big names, the ones with the
deep pockets.
deep pockets, exactly.
Yeah.
And, their involvement in a company, it's a huge signal, right? Especially in a shaky market like this where other investors might be a little hesitant. Having that tier one name attached to your company, it can really make a difference.
It gives you that credibility.
Exactly. But there's a flip side to consider here.
Okay, I like where you're going with this.
Especially for early stage companies.
So what's the potential downside of
Yeah.
chasing those big name investors too early on?
Well, sometimes, trying to secure that validation, that big name validation early on,
Right.
it can lead to, companies giving up too much equity or too much control.
Right, because they're so eager to get them on board.
Exactly. And it might even kind of steer the company in a direction that doesn't necessarily align with their long-term vision.
Interesting.
Because they're so focused on,
Leave those investors?
pleasing those investors who might be, looking for a quick return.
Right, they're thinking short term.
Exactly. Short-term gains.
So what's Allied's take on this whole tier one investor thing?
Well, if you look at their track record and what Wilson talks about in these newsletters, they're not afraid to be contrarian.
They don't seem like the type to follow the crowd.
You got that right. Their strategy seems to be much more about identifying and supporting companies before they even hit the radar of those tier one investors.
So they're comfortable being the first ones in.
They're comfortable being early backers, even if it means,
Flying under the radar for a while.
flying under the radar, maybe not getting as much kind of, press and attention,
Right.
but they're playing a different game.
Interesting. So it's like they're intentionally
Yeah.
zigging when everyone else is zagging.
That's a great way to put it. But the
Yeah.
question is, does it work?
Right. Because it's a bold strategy, it's definitely not the conventional approach.
No, it's not for the faint of heart, that's for sure.
But do the newsletters give us any indication of whether or not it's actually paying off?
Well, I think if you look at some of the examples they highlight,
Okay.
it's hard to argue with their results.
Give me some examples.
I mean, think about it. Some of the most successful companies in recent history, companies like, Canva, Uber, even Facebook back in the day.
Right. Those are some pretty big names.
Exactly. And they all kind of thrived without relying heavily on those big name investors, at least initially.
Interesting.
And in fact, for some of them, I think it actually allowed them to kind of,
What, like develop more organically?
develop their products, their business models without the pressure and the scrutiny that comes with,
Having those big names attached.
having those big names breathing down your neck. Yeah.
So there's something to be said for having a little bit of breathing room.
I think there's a lot to be said for it.
It really makes you wonder, though,
Yeah.
if Allied is kind of intentionally looking beyond those companies that are attracting all those big tier one investors,
Right.
what are they actually looking for?
Yeah.
And the newsletters
Mm-hmm.
do give us a little bit of a glimpse
Mm-hmm.
into their portfolio.
They do.
And it's a pretty diverse group of companies.
It's interesting, right?
It is interesting. It's like, it's not just, a
Yeah.
bunch of sauce companies or
Yeah.
whatever the latest
Trendy app.
trendy app category is.
Yeah, exactly. It's not just, another food delivery app or something.
Right.
They've got companies like Rook, GroWrk, Funbrink,
Okay.
all in fintech. You've got Share doing some really interesting stuff with real estate. Zen Sports in the sports betting world.
Mm-hmm.
Keyphone on the consumer tech side.
And then they even mentioned that AI company.
Right, which is still a bit of mystery.
It's still under wraps.
A little bit of a teaser there.
Yeah, exactly. But I'm curious, because
What?
Wilson even says himself that a lot of these companies are in sectors that were hit really hard by those market shifts we were talking about.
Right, exactly. Like, you would think
You would think he'd be,
maybe shy away from those a bit.
yeah, a little more cautious, a little more hesitant to kind of,
Right, but I think that's where, his focus on runway comes in, because he talks about this a lot.
he mentions it a lot
He really emphasizes that they look for companies that have
with a solid
at least 18 plus months of runway
after they invest.
after they invest, which is, that's huge.
That's huge, especially in a market like we were just describing.
Absolutely, because think about it, right?
Yeah,
If you're a company and you've only got, 6 months of runway,
right. You're
constantly thinking about that next fundraise.
You're in panic mode.
And when the fundraising environment is tough,
Yeah, you're not thinking clearly.
it leads to bad decisions.
Exactly.
So giving these companies,
that breathing room.
that breathing room to actually focus on building a great product, building a great business.
Not just enough to stay afloat,
Exactly. Not just enough to keep the lights on,
but to actually make progress.
to actually thrive.
And it's interesting, because
Yeah.
when you look at some of the successes they highlight in the newsletters,
Mhm.
like they talk about Rook's revenue growth,
Yeah, really impressive numbers.
Rook's rapid expansion,
Taking over new markets.
even Vint with those successful new product launches.
They've been on a roll.
Yeah, and it's like, it's hard to ignore the fact that these companies, they had the resources to actually
weather the storm.
to weather the storm and to stay focused on what they were doing.
And they weren't just,
Right, they could stay laser focused on their goals.
and they could be opportunistic.
Yeah, when everyone else is freaking out, they're like, all right, let's go.
Exactly, because they've got that runway. They've got that support from Allied.
It's like Allied is saying,
Yeah.
you leaving you, we're in this for the long haul.
Go build something great.
Exactly. Now, all that being said,
Yeah.
what about that AI play?
Ah.
Because everyone and their cousin is talking about AI these days.
It's all the rage, isn't it?
It really is.
But what's Allied's angle?
That's what I want to know, because they always seem to be doing things a little differently.
Well, remember that September newsletter
Yeah.
where Wilson gets into...
He gets a little philosophical
He does.
about his views on AI and specifically all the hype
Right.
around large language models,
Yeah.
or LLMs.
As the cool kids call them.
Right, exactly, the cool kids.
But you can tell he's obviously excited about the potential.
Mm-hmm.
But he's also, I think, very quick to point out that
Yeah.
simply slapping an LLM onto an existing business model,
It's not a magic bullet.
it's not a magic bullet. It's not going to, suddenly solve all your problems.
Right, you can't just sprinkle some AI on it and call it a day.
Exactly. And I think he recognizes that, which is refreshing because
He's not just
he's not just chasing the hype train.
chasing the AI hype train, he's looking for something more.
He wants the real deal.
Yeah.
And that's why I think that investment in the AI defense tech company,
It went from November
the one from November, right?
Yeah.
That's such a perfect example.
of what they're actually looking for.
Exactly. Because it's not just about using AI, it's about investing in the companies that are
Right.
building the future of AI.
the future of AI, exactly.
And I think that's a really important distinction.
It is a really important distinction. So it's about finding those companies that are truly innovative,
Mm-hmm.
the ones that are doing things differently,
Pushing the boundaries.
and not just riding the coattails of the trend.
Exactly, which, if you think about it,
Yeah.
goes right back to
Back to those core values.
the meaningful and sustainable differentiation.
It always comes back to that, doesn't it?
It really does, because I think Wilson believes, and, reading between the lines here a little bit, but I think he really believes that the real opportunity in AI...
The generational wealth creation opportunity.
Yeah, that's what he calls it.
He does, that's right.
He really believes that lies in the companies that are fundamentally changing the game.
Not just tweaking the rules, but actually rewriting them.
Exactly. And that's a bold vision.
It is a bold
But
vision.
it's an exciting one.
It is exciting, and you know what? It makes you think twice
Yeah.
about where the real opportunities are.
In any industry, right?
In any industry.
It's not just about,
No.
not just following the herd.
Exactly. Sometimes you got to
Forge your own path.
forge your own path, go against the grain a little bit.
And that's really, I think,
Yeah.
the question that Wilson leaves us with.
Mhm.
Are we brave enough
To look beyond.
to look beyond what's comfortable, what's familiar,
To embrace the unconventional.
and to get behind the companies that are really out there,
Mhm.
daring to build something truly different? Because in a world that's changing as rapidly as ours,
Mhm.
those might be the bets that really pay off in the long run.
I think that's a great place to leave it.
I agree.
Really appreciate the insights.
Happy to be here.
As always, and thanks to everyone out there for joining us on this deep dive into Allied Venture Partners.
Until next time.
See you later.